What happens when a key oil shipping route is shut down? The closure of the Strait of Hormuz has shaken global oil and gas markets, creating volatility and opening unique opportunities for investors. With 20% of global crude passing through this choke point, disruptions are driving up commodity prices and tightening the LNG market. Let's explore 5 stocks poised to benefit from these shifts. Number 5. Chevron Corporation. Chevron stands as one of the world's largest diversified energy companies, strategically positioned to benefit from higher oil prices. As the price of crude oil skyrockets due to the closure of key shipping routes like the Strait of Hormuz, Chevron's profitability expands significantly. The company has a robust upstream production portfolio and global operations that allow it to capitalize on price surges. This diversification enables the company to weather geopolitical crises better than many of its competitors. Chevron's margins have experienced a noticeable uptick as global oil prices have surged by approximately 33%, driven by ongoing disruptions in the Middle East. The company's asset base, including projects outside of the Middle East, allows it to capture upside in oil prices, making it a compelling pick for investors looking to benefit from this energy crisis. Additionally, Chevron's attractive dividend yields and rising free cash flow further bolster its appeal to income-focused investors, making it a resilient choice in these uncertain times. Number 4. ExxonMobil Corporation. ExxonMobil, another heavyweight in the energy sector, has built a strong reputation for profitability, even amid volatility. The company's low break-even cost structure means that as oil prices rise, ExxonMobil enjoys significant gains in its upstream business. With massive production capabilities and an extensive refining footprint, ExxonMobil is well-positioned to capture the benefits of higher commodity prices, particularly when supply disruptions affect global markets. As global oil supplies dwindle due to geopolitical turmoil, ExxonMobil's ability to leverage its upstream business positions it as a major beneficiary of rising crude prices. The company's substantial balance sheet, backed by decades of experience in navigating volatile markets, makes it an ideal pick for investors seeking both growth and defensive stability. ExxonMobil's commitment to dividends also adds an extra layer of confidence for income-focused investors during these turbulent times. Number 3. Cheniere Energy. The liquefied natural gas market has been significantly impacted by the geopolitical disruptions following the closure of the Strait of Hormuz. As the global supply chain faces significant strain, companies like Cheniere Energy are rising to the occasion. As one of the largest LNG producers in the United States, Cheniere has become a key player in the market, helping to fill the gap left by Middle Eastern LNG exporters whose production has been hampered by the regional turmoil. Cheniere's expansive U.S. export facilities are ramping up operations to meet the surging demand for LNG, positioning the company for sustained growth. The closure of vital LNG production sites in the Middle East has sent global LNG prices soaring, creating a perfect storm of rising demand and limited supply. Cheniere, with its robust export infrastructure and ability to scale, is set to capture a larger share of the market. While the geopolitical situation may eventually stabilize, the long-term damage to LNG infrastructure in the Middle East could keep global LNG prices elevated for years to come, giving U.S. producers like Cheniere a distinct advantage. Additionally, Cheniere's flexible pricing model allows the company to adapt to rapidly changing market conditions, ensuring that it can maximize returns during periods of supply scarcity. As global energy markets continue to shift towards more sustainable and secure U.S.-based LNG sources, Cheniere's competitive edge makes it an attractive choice for long-term investors. Number 2. Venture Global LNG. Venture Global LNG has emerged as one of the standout performers in the LNG market, particularly as geopolitical tensions have disrupted the traditional flow of natural gas supplies. Unlike many of its competitors, which are often tied to long-term, fixed-price contracts, Venture Global has a more flexible pricing model that ties its exports to the spot market. This flexibility enables the company to capture premium pricing during periods of supply scarcity. particularly when global LNG flows are affected by geopolitical events such as the closure of the Strait of Hormuz. As demand for LNG increases globally, Venture Global's ability to adapt to market conditions and secure higher-margin deals gives it a strong competitive advantage. With its impressive export capacity and an expanding portfolio of long-term growth projects, Venture Global stands to benefit from the surging global demand for U.S.-produced LNG. The company's strategic approach, which combines flexible pricing with substantial export infrastructure, positions it well for the long haul. Moreover, its favorable contractual structures allow it to capture premium prices during periods of supply disruptions, making it an appealing choice for investors seeking exposure to the growing LNG market. As Venture Global continues to expand its operations and facilities, it strengthens its ability to capture more market share and cement its place as a key player in the global LNG supply chain. With a proven track record of growth and a pipeline of exciting projects, Venture Global offers strong long-term growth potential for investors looking to tap into the LNG boom. Number 1. Frontline Limited. When vital oil and LNG shipping lanes like the Strait of Hormuz are closed or restricted, it's not just the energy producers who feel the impact. Shipping companies such as Frontline Ltd. also stand to benefit. The rerouting of oil and gas tankers around Africa's Cape of Good Hope significantly increases the length of voyages, directly raising freight rates. This phenomenon is referred to as the freight supercycle, and it creates an earnings boom for companies operating large tankers and LNG carriers, such as Frontline. As more tankers are required to traverse longer distances to deliver energy supplies, shipping demand skyrockets, pushing freight rates to record levels. Frontline has experienced a dramatic uptick in its share price as the surge in freight rates drives up its earnings. Some analysts predict that Frontline stock could jump by as much as 50 to 70% as the ongoing disruptions in shipping routes continue. With demand for very large crude carriers and LNG carriers at an all-time high, Frontline stands to benefit from the increased ton-mile demand. These carriers are the workhorses of the shipping industry, and as they become more essential to transporting oil and LNG across longer routes, companies like Frontline, which own and operate these ships, are poised to capitalize on the demand. Shipping companies typically perform exceptionally well in cyclical markets, especially when global uncertainty and geopolitical tensions increase. Frontline's strong position in this freight supercycle, coupled with its defensive nature, makes it a prime candidate for investors seeking both cyclical growth and the safety of well-established infrastructure. With increased volatility in the shipping sector and higher demand for transportation, Frontline is uniquely positioned to profit from these disruptions. Investors seeking exposure to this dynamic market can benefit from the combination of increased earnings potential and long-term growth opportunities. As shipping rates surge in response to global energy supply changes, Frontline's fleet of very large crude carriers and LNG carriers offers significant upside potential, making it a valuable addition to a portfolio in the current environment. If you found these stock picks interesting and want to stay ahead of the curve in the world of energy investments, don't forget to hit that like button and subscribe. Stay tuned for more insights into the market's biggest opportunities. If you want to be smarter every day, like and subscribe.